Now, in his second term, the American President Donald Trump has seemed to have perfected what analysts call the closed market doctrine. The U.S. administration seems to be following a pattern where geopolitical shifts are announced in the 48-hour window when global exchanges are shut. And experts say that this allows the markets and the algorithms to process the price shocks before the opening bell on Monday. The clearest example came on the 3rd of January 2026, which was a Saturday before dawn. U.S. forces captured/kidnapped Nicolás Maduro from Caracas. Now, Trump confirmed the operation from Mar-a-Lago at about noon, with the global markets frozen until Monday morning. The pause was deliberate. Investors spent the weekend modeling the oil supply rather than dumping futures in panic. When trading resumed, the Standard & Poor's 500 opened up by 1.1% and traded without the volatility shock. The same logic was witnessed on a Friday evening on the 19th of September 2025. Trump had signed an executive order adjusting the legal status of TikTok and other foreign-owned platforms. The news seeped out slowly after the bell for Monday morning. Markets had priced in the move, and the Standard & Poor's 500 rose by about 0.8%, led by technology stocks. On Sunday night, that is the 27th of July 2025, Trump announced reciprocal tariffs against Brazil and China, with no live markets to absorb the shock. The traders worked through the models and scenarios overnight, and when the bell rang, the Standard & Poor's 500 opened down by about 2.4%. It was a severe market reaction at the opening, where the markets largely avoided an intraday free fall. The pattern began on Saturday night, June 21, 2025, when Operation Midnight Hammer bombed Iranian nuclear facilities. Now, Trump disclosed the attack while markets were closed. Oil fears flared over the weekend but cooled by Monday. The Standard & Poor's 500 fell 1.2% at the opening, but then traded in a range without much volatility. And across these episodes, the pattern was consistent. By shifting shocks into market downtime, the administration replaced immediate reactions with delayed analysis, containing volatility by letting time set the opening price. For all the latest news, download the WION app and subscribe to our YouTube channel.